Hi, I'm Hewison. I'm coming to you from the digital studios of MarketClub. And the market we're looking at today is the Dow, symbol DJI on MarketClub. This is a daily chart. Right here you can see the daily chart. And we're going back to October here of '07. And obviously you can see we had a pretty tough market trending down. We love trending markets, by the way. And then we've turned up here in March of '09. So I've already drawn in an important trend line, and it touches here and here, and we're right around that level right now. The market's down about 103 points so far today. We're doing this live. It's around 2:30 Eastern Standard Time, and I'm going to put in a tool we've used many times before to show you something what I consider to be very important for the Dow. So let's take everything off the screen and let's go up and put in our Fibonacci tool, and that gives you a pretty close idea of where we are here. And you can see the number we're at right now in the Dow is right around the 50% retracement level. This is a very important level in terms of resistance for the Dow. We've talked about the S&P coming back up, rallying back up. The NASDAQ has gone a little further than the 50% level. But this seems to me this is where the market is going to fail, probably right around here. If you look really closely at this market, and we'll take it in and look closer, and that is if you go, we are going to, that's the trend line. I know you can say it's been broken here, but the reality is it's a long-term trend line, and you are allowed a little bit of wiggle room on technical charts, so especially ones going back so far. But this is the important thing I want to show you with this market right now, is the fact that the market's having problems and appears to be in this very broad trading range. You can see how it's just been going like this. No trend. The market is preparing to do something, and I believe it's preparing to take a nosedive. I think a lot of the information that we have been put into the press that's available has all been very positive, and that's why the market was anticipating maybe even better times than we're seeing right now. But look at this on the MACD line. This is the MACD indicator. As I've said before, it's developed by a friend of mine called Gerald Pell. And as you can see, when the line goes, the blue line goes over here, which is right around here somewhere, the market goes up, and when it goes down here, the market's supposedly going down. Now, we've been going sideways, but if you look at this further out, you've got a negative divergence, meaning the market's sort of making new highs, but actually the divergences, or the MACD, is going just the opposite way. So the question is, what happens now? Is this just going to be another one of those moments when we go back up again, like we saw here and here and here, or is this actually going to be a true turn down in the market? Well, let me just take everything off the screen again, and I'll show you what I think is going to happen. And that is, if we get a move below this level, pretty much right here, then I think we've put in a pretty important top for the Dow. Now, it's only if we close, I think the level is 10,285. I'll put it, in fact, let's just do that. We'll look at a close only chart, and we'll get a much closer idea if we close down below that today. So it's easy to do with MarketClub. You just click here, and you can see the low here is right around, let's see, the close is 10,285. That's correct. If we close below that level anytime, either today or tomorrow, then this is going to look as if it is a top like this. So if we close below this point here, that's 10,285.97. If we close below that level, then I think we've probably put in a top, and we could quite easily see a move from this level down to probably the 10,100, even the 10,000 level. I think that would certainly be in the cards, but it's a little premature. Our trade triangles are still positive, and in fact, let's just put those on so you'll get a good idea. They're still longer term positive, but there's the monthly and there's the weekly, and as you can see, we're trading at a 55% level. 55% means this is a trading range, and it's likely to continue until we see a move maybe in the weekly down below these levels. If we see it below there, then I think we'll see more downside pressure. So this is Adam Hewison looking at the Dow and being cautious. Let's see how things work out.